Stocks are falling, headlines are panicking, and most investors are stepping back. But this is exactly when smart money leans in. While the noise distracts the masses, key opportunities are quietly emerging in overlooked corners of the market. In this video, we'll break down 10 powerful companies that could deliver major gains ahead. Number 10. Champion Homes Inc. Champion Homes Incorporated, NYSE. Sky is one of the biggest names in manufactured housing. The company recently reported its fourth quarter results, missing estimates, which contributed to its stock declining by approximately 26% over the past month. But while the numbers caused concern, the underlying strength of the brand remains. Champion's president and CEO, Tim Larson, emphasized that despite the miss, the company delivered robust performance across key business drivers for the fiscal year. The market's reaction has pushed its RSI to 25, an oversold zone, indicating a potential buying opportunity. With value score metrics still favorable and a strong history in the modular home space, Champion Homes could rebound significantly. Number 9. Cavco Industries Inc. Cavco Industries Incorporated, NASDAQ CVCO, another player in the manufactured housing sector, also faced a rough patch recently. Its stock dipped around 17% over the past month. However, this decline followed an unexpectedly positive earnings report in May. According to CEO Bill Bohr, a rebound in March sales offset earlier weather-related disruptions. The stock may be down, but Cavco's stable production and readiness for market expansion make it a hidden gem. With an RSI of 27.3, it's another stock that technical traders might find too attractive to ignore. Given its consistent management and potential for renewed demand, Cavco is a smart play for long-term growth investors. Number 8. Betterware de Mexico, SAPIDCV. Betterware de Mexico, SAPIDCV. NYSE BWMX is one of the lesser-known companies on this list, but that could be its greatest advantage. The company specializes in home solutions and direct sales across Mexico and Latin America. Following a disappointing Q1 report, shares fell nearly 17% in the past month, trading just above their 52-week low at $7.65. But fundamentally, BWMX still has a strong distribution model and brand recognition in emerging markets. With an RSI of 24.5, the stock appears deeply oversold. For investors interested in Latin American growth stories and turnaround potential, Betterware presents a compelling case. Number 7. Moleculan Biotech Inc. Moleculan Biotech Incorporated, NASDAQ MBRX. The company recently announced a public offering at a steep discount, causing shares to tumble around 58%. While that's alarming to some, it may signal opportunity to others. The stock now trades at just $0.29, barely above its 52-week low. With an RSI of 21.4, it's one of the most technically oversold stocks in the market. Investors betting on turnaround stories or clinical trial successes may find MBRX an intriguing speculative bet. Number 6. Regeneron Pharmaceuticals. Regeneron Pharmaceuticals, NASDAQ REGN, is a biotech powerhouse that has delivered impressive returns in 2025. Up over 50% year-to-date, the company continues to benefit from strong demand for its flagship drug, Eylea. This product alone addresses a growing market due to aging populations in key regions. Beyond Eylea, Regeneron's pipeline includes promising treatments for cholesterol, asthma, cancer, and even COVID-19 variants. Their recent earnings beat, with $7.16 EPS versus the $5.59 estimate, is a testament to their financial strength and market position. With an ROIC of 25.4% and ongoing support from U.S. health authorities, REGN is a biotech stock that deserves a closer look before its next leg up. Number 5. Masco. Masco Corporation-NYSE:MAS might not be as flashy as a biotech or tech name, but its fundamentals are rock solid. Known for its Behr Paint and Delta Plumbing brands, Masco is deeply embedded in the home improvement market. Its ROIC of 52.7% is nothing short of remarkable, showcasing how well the company manages capital. As millennials and Gen Y enter the home buying market in large numbers, demand for Masco's products is expected to remain strong. With dominant market positions and a growing customer base, Masco is not just a steady performer. It's a long-term compounder that could outperform expectations. Number 4. Catalyst Pharmaceuticals Inc. Catalyst Pharmaceuticals Incorporated, NASDAQ CPRX, is one of the most promising mid-cap biotech companies in the market today. Its share price declined by roughly 13% over the past month, offering a rare entry point. The company posted an excellent Q1 earnings beat and maintains a strong momentum score of 81.89, according to Edge Stock Ratings. Their specialized therapies and expanding pipeline make them an increasingly important name in the neurological and rare disease treatment space. With an RSI of 27.5, the stock looks technically oversold, creating a combination of value and momentum that few biotech stocks offer right now. Number 3. Lam Research. Lam Research Corporation NASDAQ LRCX is one of the most critical players in the semiconductor ecosystem. As cloud computing, big data, and IoT continue to drive exponential growth in data usage, demand for memory chips has surged. Lam's specialty in etch, clean, and deposition processes makes it a key supplier for companies like TSMC and Samsung. With a 23.1% ROIC and strong R&D investments, Lam is well positioned to benefit from the next wave of semiconductor innovation. The chip shortage spotlight may have dimmed, but Lam's importance in the supply chain hasn't. Investors looking for exposure to semiconductors should strongly consider this stock. Number 2. AVITA Medical Inc. AVITA Medical Inc. NASDAQ RCEL is a transforming force in wound care therapy. Although the stock has dropped about 21% in the past month and sits near its 52-week low, the company's product expansion tells a different story. CEO Jim Corbett highlighted how the firm has grown from a single-product business into a multi-platform leader. With a market opportunity that's expanded to $3.5 billion, Avita's recent launches, RECELL Go Mini and Cohelix, are expected to drive strong sales in the coming quarters. Its RSI of 24.2 shows it's heavily oversold, and with significant room for upside, this could be the breakout biotech to own in 2025. Number 1. Apple Inc. Apple Incorporated, NASDAQ. AAPL needs no introduction, but it's still worth highlighting, especially with the services division booming and over 550 million paid subscribers. Apple's ability to drive consistent returns through innovation, brand loyalty, and ecosystem lock-in is unmatched. The iPhone SE resurgence and steady growth in wearables add to its future outlook. The company continues to report a strong return on invested capital, ROIC of 29.4%, reflecting operational efficiency and profitability. Although it may seem like a safe stock, many investors underestimate its ability to evolve and maintain dominance in a rapidly changing tech landscape. Missing out on Apple might mean missing out on one of the few stocks that blend stability with growth. If you found value in this video, make sure to give it a thumbs up, subscribe to the channel, and hit the bell icon so you don't miss our next deep dive.